It's time for CIBL Biz Tips, bringing you actionable strategies to grow and improve your business. Prepare to become civilized.
What's up, Central Illinois? Welcome to CIBL Biz Tips, where we bring you concepts and strategies to grow your Central Illinois business. Today, we have back in the Zoom recording studio a couple of CIBL vets, John DeFreitas and Nick Gentile from Heartland Bank Trust. How are you guys doing today?
Awesome, man.
Doing good, man.
Glad to be back.
Hey,
yeah, thanks for having us.
Happy to have you guys. So for all you listeners out there, if you didn't catch any of the episodes that John and Nick were on, I think you've been on like 12 episodes now. So it's been, so we recorded one. We had 4 sessions about how to start a podcast. Then we interviewed you guys individually, and I can't remember if that was it. If we had a few more, maybe we were on your podcast. That's what it was.
Yes. Yep.
So John and Nick are the co-hosts of the Centers of Influence podcast. So check them out as well. So today we are going to be talking about the exciting and sexy topic of lines of credit or business line of credit. So I want the experts over there at Heartland State Bank. Is it Heartland State or Heartland Bank? Heartland Bank and Trust.
Yep.
In Springfield. John, Nick, I guess the first question for all our loyal listeners, what in the world is a line of credit?
So I can take this one, John. And it's nice to be able to actually use some of our expertise on this podcast. I just had that thought where it's like, I feel like we've talked a lot, but we talked about how to start a podcast, and we've talked about, kind of getting to know you guys and you guys getting to know us personally a little bit better. But it's nice to actually start digging into what it is that we do for a living. So appreciate that opportunity.
Absolutely.
But the simple way to put it, a line of credit for a business owner is going to be a tool or a vehicle that they're going to use to be able to have some flexibility with their spending and to have some kind of on-hand liquidity to be able to grow and accomplish their financial goals. So the easiest way that I've been able to explain it to people is, if people are familiar with the home equity line of credit, that's probably a good one to refer to. If you're used to using credit cards as well, that's probably another good example where, you have this available balance that you can tap into to, you can utilize it to make purchases and just have funds available to accomplish your financial goals. So if you've got somebody that has a longer sales cycle and they've got some receivables that take a little while to come in, they can use the line of credit to kind of fill in those gaps.
Awesome. So a line of credit, it sounds like something that you can apply for, that you can, what do you have as a business owner? What are you using as, like, when you're applying for a line of credit? Do I have to have some assets, some equity? Can I be a brand new business or not even started a business? How does that look like?
Yeah, so typically we're going to want some kind of collateral. Most local banks are going to want collateral tied to any type of loan. An example of a unsecured line of credit would be like a credit card, like Nick mentioned. Typically, on any line of credit, though, you're going to have an approved amount. Let's call it $50,000, for example. That $50,000 is the dollar amount that you'll be able to borrow on. So on a revolving line of credit is an example like a credit card or a home equity line of credit or most business lines of credit. You can borrow and pay back and borrow and pay back within that $50,000 limit. So typically on a line of credit, what a bank looks for is for it to kind of go like this, like a wave: borrow, pay back, not just borrow it up and keep it there. Typically when a business needs to borrow and then keep it there, that we call that permanent working capital. And that's when we're going to term it out with like a regular principal and interest payment every month.
Okay.
The other thing with a line of credit, a lot of times to make it easier for the business to be able to afford that payment within the month, especially since they're typically short-term needs. Lines of credits are used for short-term borrowing. Those are going to be interest-only payments typically. So that way you can, even if your sales cycle is 60 days or 90 days, you can borrow that money, pay just the interest that you owe on what you've borrowed. And then at the end of that, when you gain those receivables, when that money comes in, you've billed those people and that money comes in, you can take that money, pay back the line of credit, and hopefully there's some profit there for you to keep.
Perfect. Hopefully that's the goal. So, I'm familiar with how credit cards work. So is there a similar payment process? So for example, if I go spend $1,000 on my credit card, as long as I pay it within a certain time frame on my, to the credit card company, I don't get charged that interest. Is there something similar with a bank line of credit, or are you still paying interest on whatever you borrow with a line of credit through a bank?
So with the bank line of credit, that's going to be charged interest daily.
Okay.
And so you would need to take whatever you've borrowed times the interest rate. That's going to be your annual payment, and then divide that by 365, and that's how much your interest would be daily. You're right. With a credit card, you're going to have that grace period where if you pay it back within that 28 days or whatever it is, you're not going to pay interest on it. But with a line of credit, we're going to look every day. What's your balance today? So if you borrowed that money today and then paid it back tomorrow, you're only going to pay 1 day's worth of interest. But yeah, we look at it daily because you could borrow every day really on the line of credit.
Awesome. Yep. You're the guys I need to talk to then if I want some money then. No, I'm just kidding. So does every business use the same type of credit, or are there different mechanisms for different types of businesses?
Yeah. So
for the most part, go ahead, John.
Yeah. So most every industry is going to be a little bit different. Some businesses we don't expect to have a line of credit. Like you might not see a restaurant have a line of credit, for instance, because their sales cycle is so fast, right? You buy food today, hopefully you're selling that food today or tomorrow, and you're not waiting for the customer to pay that money, right? For that food. You're not going to bill those customers in a month for the food that they ate today. You're hopefully going to have that money as soon as they get done eating, right? And so the sales cycle doesn't warrant the use of a line of credit. You probably have more of a permanent working capital loan at the beginning, maybe to buy inventory, to get everything off the ground, pay some people to get some staff going, something like that. But an example of a business that might really need a line of credit would be like a manufacturer.
Perfect.
So I make widgets or I buy widgets and I have to then sell those to somebody, but I might sell them on terms. So I might not receive my money for 30, 60, or 90 days because then that end user needs to sell them to somebody else also. And so they may not churn those quickly. And so is a string of people along the way that the money is being received. And so they need to be able to provide that line of credit so that they can keep making widgets for the next person and the next person while they're waiting to receive the money from the first ones they sold.
Excellent. That's a good example there. So another one that I want to hit on, another type of industry that we seem to have a lot of listeners in, is the real estate industry. So if I'm a real estate investor, is there a different mechanism or different type of line of credit that I have compared to others? And what type of purchases or how big do I need to get, I guess, before I get a line of credit, if that's a good question to ask?
Real estate investors I've seen use a line of credit in two different ways. So some of them will have that revolving line of credit that they will use, and they will use it actively to make to do regular maintenance. If they've got to make a large purchase, I've seen it used to buy AC units and things like that, kind of as a rainy day fund for those investors, especially if they have lots of properties. If you've got a ton of doors, you're going to need something like that in place. I've also seen them actually working on one right now where they've got a property that they know they're going to have to do roughly $100,000 worth of work on. So they have a line of credit for 6 months. We've given them a draw period, we call it, for 6 months to get done as much of that as they actually end up needing. So as they get in there and they start to find that things aren't working, or they might have some additional hiccups that were unforeseen, They know what the range, they know that the balance that they can draw that line of credit up. And then at the end of 6 months, we'll turn that into term debt, a term loan that they'll pay regularly scheduled monthly payments at a fixed interest rate for 5 or so years. So in my experience, that's been the two most common uses for real estate investors.
Perfect. Well, I think we've pretty much explained what a line of credit is. Is there any basic information that you would want anybody to know about a line of credit before we jump on to the next session?
A really important piece of lines of credit, as you can probably tell from this conversation, is they can be unique. There's plenty of different structures available. So, as with many things in the business finance world, getting in touch with a local banker is going to go a long way. If you don't know exactly what you need, once you start to talk about what the issues are and what the potential issues could be with your business, where you might have some gaps, you and your banker should be able to iron out what's going to make the most sense for you.
Perfect. I think that's a good place to wrap up. For all you listeners out there, make sure you're subscribing to the CIBL podcast on your favorite podcast platform. Where there, please leave us a review. You can also find us on LinkedIn and Facebook and connect with Garrett and I there personally as well. Until next time, y'all been civilized. Take care.
Thank you for listening to this episode of the Central Illinois Business Leaders Podcast. You can find us on Facebook at facebook.com/CIBL podcast. You can also follow us on LinkedIn. Don't forget to subscribe and leave us a review. It's the civilized thing to do.